They had dedicated tour guides taking the groups on planned itineraries lasting about 4 weeks. Initially, Adolfo and Kofi acted as tour guides themselves, although they gradually did less of the work as the company expanded.
Okay, so first off, when we say a private company, what do we mean by a private company?
A company which is not listed.
Okay.
On the Ghana Stock Exchange.
Okay. Okay. And what? Okay. But what does that mean in terms of the implications? If there is implications on capital raising and all of that.
Okay, that means that their capital is restricted to, as I said, private means. That is either they are from their own pocket or from family and friends, or they have to apply for loans, that is through external loans.
Okay. So first off, you need to know they established a private company. So this statement here is a big deal. They established a private company. It's a huge deal. So as we've discussed, there are restrictions to setting up a business like this, right? And so it might affect your capital raising and all that. And we are told, okay, the case was generous enough to tell us that with money from family backers, once your company is not listed on the Ghana Stock Exchange, it means that you cannot raise capital from, the public. And so you would have to use private means to raise capital for your business. And so that's exactly what they are doing here. That's exactly what they are doing here. And they said that now they give us a sneak peek into how the business tries to operate. The company's business was to organize small tour groups of tourists from the United States, mainly the northeastern states of the US. It is mainly the northeastern states. So what does this mean? This seems to be their target in the market. They are not looking at the entire US. So we would want to understand, okay, why not the entire US? Maybe there are some reasons for that. Maybe they live there, maybe they know the terrain better. Or maybe those people living in those areas are more likely to tour other parts of the world. We do not yet know yet. But it's mainly the northeastern states of the US. As we go through the case and we see any revenue shortfalls, the conversation will switch to why not expand the target? Why are we focusing only on the northeastern parts of the United States? Why not expand the target to, other parts of the United States? But we would see as we go on. And it says they had dedicated tour guides taking the groups on planned itineraries. Unplanned itineraries lasting for about 4 weeks. Initially, Adolfo and Kofi acted as tour guides themselves, although blah, blah, blah. Okay. Next paragraph. I'm trying to go through this one very early so that we go to the questions.
Okay. The tours are priced at a high rate, but the aim is to deliver high quality luxury holidays for all customers. Ghanalux uses the services of a travel booking company in the US to advertise its tours and attract customers. The booking company charges a commission for its services as a percentage of the tour prices paid by the customers.
Okay. So I said that anytime you are going through through this passage, right? There are a couple of things that you need to look out for. Number one, as you go through, as you are given the pre-seen material, you are going through, number one, you should look out for, you should be thinking about SWOT, the strengths, weaknesses, opportunities, and threats. That's the first thing. Number two, you should be looking at the PESTEL framework. Number three, you should be looking at the 4 Ps. It should be at the back of your mind. As you go through, you'd see all those things unfold little by little. In this last paragraph, we are told that the tours are priced at a high rate. So this is their pricing at a high rate. Now, if the case tells you something at a high rate, you need to, you always need to question it. So you need to look at the pros and cons. Okay. So what are the advantages of pricing at a high rate? What are the downsides of pricing at a high rate? Why are they even charging a high rate? Why are they even charging at a high rate? Is it that they do not have a lot of competition in the market, or they are giving some, premium service? That's why they are charging a high rate. So this is their strategy. They are pricing at a high rate, premium pricing. But the aim is to deliver high quality luxury holidays for all customers. So you see, so they are adopting some form of premium pricing of some sort. We discussed pricing strategies. So if you haven't looked at that presentation, please go and look at it. Ghana Lux uses the services of a travel booking company. Now, immediately when I read this, I knew this is something to highlight. So they've outsourced customer acquisition and advertisement to a third party, a travel booking company in the US. So immediately what comes to mind is the advantages and disadvantages of outsourcing. Is it worth it for them to, outsource such, a key part of the organization to a third party? Would they be as committed as them if they had handled it? Because this is about customer acquisition. So these are questions we'll be asking ourselves. Then the booking company charges a commission for its services. They charge a commission. But what does this mean, that they charge a commission? It means that for every customer revenue that they bring in, a certain percentage goes to them. What do you think about this compensation method? Just ideas. Lorraine, if you are not following, just let us know, okay? What do you think about this compensation method? Does it make sense to you? Like, why do you think that this commission-based structure, do you think it's helpful?
Well, so I think at the initial stage of business, well, due to the fact that they don't have the resources or probably the employee to engage in the travel booking services, they're going for a third party at the initial stage. For them, it's a helpful thing because without the booking, you don't get your customers to come into the country for those tour. So at the initial stage, due to the fact that they don't have all the resources needed, they don't have all the resources at their disposal. I think that's the only strategy they could go for.
I see. Who has an adverse opinion?
I have an adverse opinion about the percentage of the price.
Okay.
So in case the firm wants to increase their income, because they're already taking a percentage of the price paid, even if they increase the prices, it's like you are still going to get probably, if it's, let's say 30, 70, you're still going to get to that. So the only way you can, increase probably your revenue is by increasing the price, which may be a put up to the customers.
Okay, but they can also, can they also increase revenue by increasing customers?
Well, as they're bringing in, it's like as they're bringing in, there's still a leakage because of the percentage they're taking as compared to probably a flat rate or a fixed amount. Let me put it that way. So let's say you're giving them $1,000 every month as compared to probably a percentage. So even if you're given a fixed amount, as more customers come in, you realize that you are at a better position of gaining more revenue as compared to a percentage.
Oh, okay. I see what you mean. I see what you mean. Okay. I see. So, okay. So if you are for the commission structure, type 1. If you are not for the commission structure, type 2. Now, in this class, no right or wrong answers. I just want to see how you are reasoning. If you think the commission structure, they don't have any option, type 1. If you think the commission structure is good, type 1. If the commission structure is not a good idea, type 2. If you also think that there might be other, no. Okay, 1 and 2. Let's just hold 1 and 2. Okay. So, okay. So, as we go through the passage, we would see whether it's a good idea or it's not a good idea, right? We would see. Because what it means is that they get a share of, they get a share of the revenue. Is it a good idea? Is it not a good idea? And how do you evaluate that? How do you evaluate that? If, let's say, what's the name of the company? Ghanalax, right? They train their own people to engage in advertisement and customer acquisition, right? To get their own customers. Would that be a better trade-off compared to, outsourcing to a travel booking company who will get a cut of their revenue? So that's how you do your analysis, right? If I do this in-house, it's just like in accounting, you have this analysis that they call make or buy. Yeah. So if I do this in-house, what will it take me? Right? It will require that I get my own people. If I don't have them, okay, what will be how much do I need to pay these people? And how much will they bring in? Then it means that I'll keep all the revenue in that case. Versus I just outsource to a travel booking company and then travel booking company, and then they get some of my revenue. So it's a pro and con thing. Yeah. So for some people in the area of customer acquisition, they would like to control that side of things, because people want to keep their revenue. Unless, most people would like to control that side of things. Okay, let's move on. As we go on, we will see which one is the best. Early growth.
Okay. The early growth. The tourism industry in Ghana has suffered from a skill shortage, and Ghana has proved a success initially because Adolfo and Kofi were both talented individuals with a strong motivation to succeed, extensive knowledge of Ghana and its tourist attractions, and ability to communicate easily with their US customers. The company gained a strong reputation in the parts of the US for efficient tour organization, but also exhilarating and life-enhancing tours.
Okay, so like I've always said, when you're going through these cases, always think about strengths, weaknesses, opportunities, threats. You can't go into the exam without remembering that. Now, it's talking about the tourism industry as a whole. The tourism industry as a whole in Ghana, right, has suffered from a skill shortage. So overall, it's given us what is happening in the industry. So I suffered from a skill shortage. And Ghana Lax proved a success initially. At the start, it proved a success initially because Adolfo and Kofi were both talented individuals. So that's a strength. The strong motivation to succeed, extensive knowledge of Ghana and its tourist attractions, and an ability to communicate easily with their US customers. So that's a strength labeled right there for you. The company gained a strong reputation in parts of the US for their efficient. So it's all talking about, their strengths here. Very, very important. So like I always say, when you're going through the case or the pre-scene material, never forget what. Okay, next paragraph. I don't want to spend too much on the pre-scene because I expected that you guys will do it. So. Okay, next paragraph.
The company operated from a small office in Accra, from which tours were organized and coordinated. In the first year of operations, ending December 2012, they generated revenue just under 2 million Ghana cedis. And although they made losses in the early years, they were pleased with the revenue growth they achieved. As the company grew, it recruited a small number of full-time tour guides, using contacts in US universities to identify and attract Ghanaians who were studying there and were attracted by the prospect of working in the tourist industry in Ghana. And for a company where the prospect of career development seems strong, in recruiting new guides, the company looked for individuals with strong motivation, an interest in Ghana and its history, culture and resources, and an ability to communicate well with both foreigners and the local folks.
So here, it's just talking about the allocation, the resources, the kind of talent they recruit. It's very, very important, the kind of talent they recruit. Main thing I would focus on here is, the talent. It seems that their talent gives them some competitive advantage, because like at the beginning of this whole story, it says the industry faces skill shortage, but they are able to leverage their contacts in the US to be able to get them, some students, people who were studying, Ghanaians who were studying in the US and etc. Next paragraph. I want us to get to the real question, because next paragraph. There's so much to talk about, but I wish you guys had done the analysis. Next paragraph.
By 2018, the company was operating several tours each year for tour groups of about 16 people who were willing to pay premium prices for a top quality holiday experience, combining elements of Ghanaian culture, heritage, recreation, and adventure. They also started to organize special theme tours each year to the Panafest Festival in Elmina and Cape Coast. The company annual revenue in 2018 amounted to just a short of 16 million, and the net profit margin after tax was about 4% of revenue, or 639,000 Ghana cedis.
Okay, so let me spend a little bit of time. By 2018, the company was operating several tours each year for tour groups of about 16 people who were willing to pay premium prices. So you see the pricing here is talked about again, premium prices for a top quality holiday experience, combining blah, blah, blah. So this is the product that they're offering. Combining elements of, they are giving a tour, but it combines elements of recreation, adventure, and all that. And they also have their themed tours. So what are themed tours? So these are tours that are, built around a particular event in Ghana, a big event in Ghana, So a typical example is the Panafest Festival in Elmina and Cape Coast. So it's themed. So maybe a Boatre Festival. Then they organize a tour around it so that when the tourists go, they can experience that as well. The company's annual revenue in 2018 amounted to just short of 16 million, right? 16 million. And net profit margin after tax was 4%. Now, what do you guys think about this? The revenue is 16 million. But the net profit is 4% of the revenue. What do you guys think? So why is this 96%? That's the question.
All in operating costs.
So you see, that's the power of ratios, right? So when you see something like some of them, this one cried, they were even good. Some of the pre-seen material, they're even nice to give you the ratio, net profit margin to 4%. They could have said net profit was 639,000. And then you calculate. Some students who haven't learned their ratio, they don't even understand what's going on. But if you've learned your ratios, you know that I should divide 639,000 by 16 million. In that way, So it means that a lot of their